Hello everyone, good morning. I hope we'll just wait for 2 more minutes. Few people are still joining in. So after that, we will start with our first session of the part two.
Hey, Siddhi.
Hi, good morning.
Good morning. Quick question. So the email you just sent now, right, to access the course, I don't think any of those links are working because I'm trying to open the visit store or the visit community. I don't think
No,
it.
that is for just demo lecture. The exact link will be received after 3 days. That is just for today's session. That is not for any other material or anything. Material will get couriered to you, that summary book. The actual book we have not yet sent to anyone. In this 3 days, we are still receiving the registrations and everything. So after this 3 days demo is completed, we will be sending the actual material, those who have actually enrolled in our batch. So you have already enrolled, you will receive it. The today's link is not that link which you are thinking. Okay.
Okay. So the actual PDF materials won't be released till 3 days, I guess.
Yeah, I'll send you to today evening only because since you have already enrolled in the batch. So for
Right.
you, I'll just send it. Okay.
Okay, and I'm not getting any hard copies, so I guess it's all PDF for me.
Glam material will be PDF. Summary chart book you will receive in a hard copy. I know you are staying at other location, but still send me your address. We usually used to courier to out of India also, so it's fine. You
Okay,
can send
I'll
me your
text you
address.
my email. Okay, I will.
Sure,
I will message you that. Yeah.
perfect. Okay, so I think now everyone has joined. Let's start with our today's topic. That is, let me share my screen. Okay. So first, I'll just give a quick overview of what all topics are included in our part two businesses chapter. Okay. So here we have, as per claim material, we are going to use whole claim material. Along with that, you will also get the summarized notes. Before going to the summary note, I will request everyone to go through our regular lectures, our regular material, then only jump to the summary book. It is just for your summary revision, right? So study unit 1 to 20, total 20 chapters you are going to have in part 2 businesses. Part 2 is a little bit lengthy as compared to 1 and 3. So if you're starting directly with the part 2 first, it will be good enough, not an issue. You will complete it on time, and we have a timetable of 45 days. Okay, since we are going to keep the sessions on daily basis, so we will completing the whole course in 45 days. Monday to Friday, every day we will have our lectures in morning 8:30 a.m. to 9:30 a.m. Right? So today I will be starting with the study unit 1, which is entity types, methods and periods. So what are the entity types? What are the corporations which are used in US taxation is all about your business taxes. Okay, once you understand what is the type of entity, what are C corp, what is S corp, what are types of partnership, once you get the knowledge of all this, then we can move to the next topics, that how much income will be taxable, how much expenses will be allowed. Okay, so we are not going to take in the same sequence. So it will not be like after completing study unit 1, I will be moving to second, third, fourth, not like that. We are going to link the topics internally. Just after completing the entities topic, we'll understand what are the business expenses that are allowed, what are the incomes that are going to be included in the tax return, right? After that, we will be starting one by one with the types of corporations. Means here you can see study unit 9, 10, 11 is whole for partnership. Then we will see about the corporation and then C corporation. Okay, so don't worry. Till the end of the third day, I will be giving you the day-wise timetable, that on which day we are going to take what topic, right? Along with this, you will also receive daily MCQs, like on daily basis. Let's say today, once we complete this topic, you will receive the MCQs, a quiz which you can solve during the whole day, like whenever you get time, you can just revise the topic and solve the MCQ. As we all know, our exam is on MCQ based. Okay, so as much as you solve the MCQs, you solve the mocks, it will be better. But along with the class also, we will be taking few examples, few MCQs in the class only, right? So let's start with the study unit number 1. I know previously there was a demo session already held on this topic, but everyone I can see who has joined are new. So I'm taking it from very basic level from our, as a regular class, we will not taking this again after 3 days. Okay, so this is study unit 1, which is entity types, methods, and period. So what are the types of entities? First, let's understand there are 5 different kinds which you need to remember. One is sole proprietor. Sole proprietor is simply means if a person wholly and solely owning the business on its own. It's an unincorporated business. They don't have to register somewhere with the IRS. But in case of partnership, in case of corporation, or in case of LLC, they can register themselves at a state level. Okay, there are so many states in US, 50 states are there. Wherever you incorporate your business at a very basic level, you have to incorporate at your respective state. Once it is incorporated, you can then go for a federal uh, federal recognition, which can be either a S corp or a C corp or a partnership. So can I say initially, if you are only registered at state, you will be called as a limited liability company. LLC, you will be calling yourself as a LLC. All right. After that, you have to make a decision if you are 2 or more members, or you are only 1 member into the business, then by default, IRS will treat you as a here as a partnership and here as a single member LLC or a disregarded entity. Okay, or a disregarded entity. Now it is your duty to call yourself either as a C corp or a S corp at a federal level. See, when you file a tax return, LLC is not going to file a simple return on at a federal level. Yes, they can report their income expenses at a state level, but as per the US tax structure, you have to file the return at a federal level. Also, at a state level, if you have some income from different state, then you have to file for different states. Okay. Everyone, please mute yourself, guys. This is we will have a Q&A session at the end. So till then, I'll request everyone to mute yourself. As soon as you join, please make sure to keep yourself on mute. Okay. So if there are more than one state income is generated, you have to file a multi-level state return. Right. So let's not get into that much detail. First, let's understand the basic overview of the different entities. Right. Sole proprietor is someone who is known as unincorporated business, who will be owned by a only single individual. Who will be the owner will only be responsible for the all the liabilities into the business. So can I say is a personal liable for his own business. What form he is going to use? He will be using a form that is Schedule C on the 1040. If you guys have already done with part 1, or if you don't know about the 1040 form, I'll just give you a brief that if you are an individual, you will file a 1040 return. Right? In 1040 return, there are different schedules. Schedule A, B, C, D, E, F, and some numerical schedules. Schedule 1, 2, and 3. So over there, Schedule C is the one which is used for reporting your business income. So let's say a single owner of a business, he's a sole proprietor. He want to report his income or want to report his business losses, then he will be reporting it on Schedule C. What is the due date for filing this 1040 return? It is 15th of April. Okay, so personally liable and the owner will have to report it on Schedule C 1040 return. Business is not separated from the owner. All the liabilities will be personally of that owner only. That is a sole proprietor business. Simple it is. Next is partnership. Partnership return needs to be filed, which will be used for Form 1065, and the return will be filed on 15th of March. Okay, partnership is a kind of a pass-through entity. Means what I can say is wherever a partnership firm is incorporated, all the partners, let's say 3 partners are there, all the 3 partners will file their individual 1040 return. Okay, individual 1040 return, and whatever share of profit they are getting from this partnership firm will be reported on the 1040 return. So can I say it's a pass-through entity? Means all the taxes will be paid by the partners, not the partnership firm. That is why 1065 is an informational return. It is just providing the information to the IRS that being a partnership firm, we have earned this much income, but this income will get transferred to each and every partner in the form of Schedule K1. Okay, so how they will inform their partners that this much is your earning share, this much is your part of distributive profit which you need to add in your tax return. The partnership firm will issue a Schedule K1 to each and every partner. Okay, there is a wholly different chapter for the partnership. As I mentioned, study unit 9, 10, 11. These 3 chapters will be there for specifically for the partnership. You'll have to understand what are the distributions, how much will be taxable, how much contribution can they make. Okay, can they make a non-taxable contribution? All those things in detail will be there in the 3 study units 9, 10, and 11. These 3 are most important. Almost your 40% course exam questions will depend on the partnership. Okay. Again, I'm mentioning, please mute yourself, everyone. Okay. Next is qualified joint venture. Before moving to that, let me make you understand the different types of partnership. What are the different types of partnership, guys? There are 2 main types of partnership. Partnership will have 2 different types mainly. That is general partnership, and next is limited partnership. Okay, general partnership means what? Where all partners are general partners. And limited means what? All partners are having limited liability except for one. At least one partner should be a general partner. This is what we called as a limited partnership. Okay, now this thing is there in your syllabus. You have to understand the difference between the general and the limited partnership, because at the time of liquidation, when the partnership gets liquidated, you need to calculate the taxable amount of the distributions, right? If the partnership is getting shut down, then all its assets, all its liabilities are settled off. So that time you have to understand whether the partner who is your client, right? He is either a general or a limited partner. Okay, so 2 or more persons who join and carry a business will be a partnership. General partner means a person who will be personally liable for all the debt. Okay, general partner will only be the person who will be running the business, who will be into the operations. Actual operations will be run by the general partners. Just a minute, guys. Okay. All right. Now you have to understand the partners. Who can be the partners in a partnership firm? They can be any corporation, any trust or estate, or any other partnership. There is a similarities between partnership firm and a S corp, but only one dissimilarity between partnership and S corp. Both are exactly same. Over here we have partners who are going to include the distributive share in their individual 1040 return. That is why partnership is a pass-through entity, right? S Corp is someone who is also a pass-through entity. Here, instead of partner, we have shareholders or members. We call it as a members or a shareholders. Okay. Here in partnership firm, who can be a partner? Anyone can be a partner. There is no limit in number of partners. There can be n number of partners. In S corporation, only the foreign individual or a foreign entity cannot be a partner. No foreign individual is allowed. Okay, this is one limitation for S corp. Second limitation is the shareholders and the number of members should be less than 100. So that is why this S corporation will be called as a small entity. As soon as the number of shareholder increases by 100, you can opt for a partnership. For S corporation, you will be filing a 1120S. Okay, this is also information return because ultimately the taxes will be paid by the shareholders or the members. Partnership will be filing a 1065 form. The deadline for both the forms are same, that is 15th of March. I can say 15th of third month after the end of your tax year. In US, what we use the tax year as Jan to December, right? So calendar year, once it is ending, the tax year is ending on 31st December. You have to calculate 3 months from that date. It will come as 15th of March. Got it? So why we are keeping as a 15th of March? Why it is third month? You have to remember that they need to provide a K1 to their individual partners or their individual shareholders and members. So for them, what is the deadline for the partners individual tax return? It is 15th of April. Can I say fourth month from the end of the tax year? So for providing them the income statement on time, IRS has given a 30 days time period. Means you can just, for your, just remembering the deadlines, you can remember like this. Usually the deadline for the tax is 15th April, but since they are a pass-through entity, partnership and S corporation, they have to give the K1s to their partners and the members. So they will be issuing the K1s once the return is filed. 1065 and 1120S therefore will be filed on third month after the end of the tax year, that is 15th of March. Okay, in exam, sometimes they can ask the deadlines also, on which date the form needs to be filed. Simply one line question can come in exam based on the due dates of the tax return. Okay, taxes will not be paid by the partnership, but it will be passed to the partners. That is what we call as a pass-through entities. And partnership is going to report income and expense on annual information return. This we call as an information return. The partnership is actually not filing the taxes. They are just providing the information to the IRS and to the partners. Okay, so this is what we call as a partnership form. What is qualified joint venture? See, many businesses run like this. Taxpayer and spouse, they both run a business together. Okay, let's say it's a family business and the taxpayer and spouse, they both run a business. So what will happen? What will happen that they both will be by default called as a partnership firm, right? If you have not taken any election, just remember that LLC topic. If you are incorporated as a LLC, by default, you will be called as a partnership And at the end of the year, you need to file a 1065, and then two separate K1 will be issued to taxpayer and spouse, right? But what IRS has given an exemption and benefit to the husband and wife, these two should be married, and this two should be filing a married filing joint return. If you have done the 1040 part 1, you might be knowing the filing status, different types of filing status. Out of that, the one is MFJ, right? If a person is married, he can opt for a MFJ or a MFS, married filing separately, or a MFJ. So what IRS suggests that if the person only in business are husband and wife, they are filing a joint return, then instead of going through the whole procedure of 1065 and then issuing the K1 to themselves, instead of doing this process, they can call their business as a qualified joint venture. Okay, but if you do not elect it, you have to make this election actually to call yourself differently from a partnership firm. See, if you don't elect it, partnership firm will be by default be added as your type of entity. Okay, so that is what it is. Qualified joint venture, it's an unincorporated business which is jointly owned by the married couples. Okay, in this QJV, qualified joint venture, only the members will be the married couples, and by default they will be called as a partnership firm for the purpose of filing the tax return at the end of year. Okay, now they want to elect themselves as a QJV. What they will have to do, first of all, both will have to agree on treating this business as a qualified joint venture. See, there should be a mutual decision between both of them. Both the spouse can elect out from not treating the business as a partnership. Okay, by default election is partnership. They can call them as a QJV by not treating them as a partnership. In that case, what will happen? They both are going to file a MFJ return. When they file a MFJ return, in that they will show all the income on a Schedule C of their 1040. Now, if they do not elect as a QJV, here they are a QJV, and let's say here they are called as a partnership firm. So what will happen in the second scenario? They will be filing a MFJ, but they will be showing a K1. Two K1s will be added. So one 1040 return they have to file, and 1065 return they will have to file. So to reduce this, extra work, IRS has given an option that just file a 1040 form and include all income and expense on directly as a Schedule C. Think like a sole proprietor. In sole proprietor, what we do, we include all income, expense, everything on the Schedule C, right? Same way for calling yourself as a joint venture, you can easily record everything on your Schedule C instead of recording it separately on Schedule K and then making some adjustments and entering all the extra data into the software. Just you can do this one thing. Got it, guys? So this is about the qualified joint venture. Only one condition is there. The person who are into the business should be married and filing a joint return, and both should materially participate into the business. Both should be the active participant. Both are running the business equally. Okay, it should not be only the spouse is working or only the taxpayer is working and other is just an inactive partner. That should not happen. Next important one is corporation. So as I mentioned, from partnership, 40% questions are based. Same way from corporations, there will be 20 to 30% questions based. And the third important topic in our part one, I'll mark you some important topics. One will be our partnership. Okay. One will be our partnership. One will be our corporation and S Corp. Both will come together. And there will be a property transaction. So these are the most important topics. Out of this, almost 60%, 60 to 65% of your questions will be based from this topic only. Right? So Corporation is something which you will call as a normal entity. Let's say you are a company. In India, what happens? You have some limited company, listed company, private limited company, public limited company. Same way, corporation is a general entity which anyone can go for. Only the disadvantage. Here you will have one disadvantage is that they will be paying tax when they file a 1120 return. There is no pass through. Only one time the tax will be paid when you're filing the tax return, right? Now, what will happen? When this corporation wants to distribute their earnings, they will distribute in the form of dividend, right? Partnership firm and S corp will not give dividend. They'll give you the share in their profit. But here they will pay the tax, and then later on, if they want to distribute their earnings, they'll give a dividend to their members. Here also they call as a members only, but they'll receive a dividend for which the members will receive a 1099 DIV. Now here the effect of double taxation will come. Once the corporation is paying tax by filing 1120, after that, when the individual are receiving the dividend, they will have to again include this dividend in their 1040 return, right? So if a person or a group is incorporated by a character from Secretary of State, okay, first they need to incorporate themselves as a Secretary of State. I'll tell you one difference. Incorporation, article of incorporation is filed. In case of LLC, article of organization is filed. Okay, see here you can see article of organization. See, right now you're not able to understand the difference between these two. When you do it practically, let's say if one client comes to you to incorporate its business, first you will need to do a tax planning that whether he needs to go for a partnership firm or a S corp or a C corporation. Okay, based on that you'll apply your mind whether you need to go for a article of incorporation or a article of organization. Okay, if you file an article of organization, you have to again file a election form to elect yourself either as a partnership or a S corporation or a C corporation. In article of incorporation, here your company is directly incorporated. Okay, here two-step procedure will be done. Once you need to organize your business through article of organization, later on through election, you need to mention it to the federal level what type of entity you are selecting. Okay, guys, any question till now? Let me know if you guys have any questions. You can just raise your hand so that I can unmute you guys and can ask the question. Okay, great. So I hope till now everything is clear. In corporation, they will have to pay the taxes by themselves. And then again, the tax will be paid by the shareholder when they receive a dividend. Okay, let's say you're holding a stock or some securities. If you receive a dividend or if you receive an interest income, you will include it in your tax return as a income, right? It is an unearned income. Those who have done part one, unearned income where you have not done active participation. You are just investing into the company and receiving the interest and dividend. Those are unearned income, or I can say passive income. Okay. Now, S corporation, we have already discussed, it is similar to the partnership. It will be filing a 1120 S corp. And C corporation, only the normal corporation will file a 1120. The form used is 1120. And since it's not a pass-through entity, they will have to file the tax return by 15th of April. They don't have to get a 1 month extra for they don't have to take a 1 month earlier to file the tax return. There is no pass through in case of C corporation. So you can remember like this: C corporation, you will be filing a return on 15th April, and in case of S corporation and partnership, you will be filing the return on 15th of March to give 1 month time to give a K1 to their individual partners and shareholders. Okay. Now the third one is LLC. In case of LLC, what will happen? First, you will file an article of organization. Now, you have not yet decided what type of entity you want to select. By default, election will be based on the number of people in your organization. 2 or more people, then it will be by default partnership. One person is there, then it will be by default single member LLC. For election, we will see that what forms are there. Mainly, it is 8832 will be filed. Okay. For exam purpose, you don't have to remember the form numbers. But if you have a lot of time before your exams, like let's say you will be giving exam in next window or in the next year in the month of end of the Feb, I would request to remember all the form numbers also. Sometimes they can ask you the straight away the form numbers in the question. That happens mainly in part 3 paper. But let's prepare for the worst case scenario. If they ask the form numbers, then what will happen? So that's why on daily basis, wherever there is a form number included in the topic, I'll explain you that also. Okay, so this was about the type of entities. Now let's read from our regular book. Actually, I'm not going to read the core theory. That will be done by you only after after completing the session. I'll just mark the important points. I'll just give the bullet points. Our process will be like this. First, I will explain you the whole core concept of the topic. Then we will take the claim material and see each and every line one by one. Okay, we'll mark some important points. We'll mark some extra topics which are not there in the book. After that, we will be taking a last 5 minutes. We'll just refer to this summarized view of the part 2. Whatever we have done today, this is just, I can say flashcards. Okay, you guys might have heard about the flashcards. These are that only. Just the small, a very summarized form of whatever we are doing in the class. Okay, so this will be our daily process which we are going to follow for part 2. Let's move to our normal PDF format, regular material. First is business entities. This is the first chapter which we have started. Those who have joined late, I'm just informing them. First is a business entity. The first one was the sole proprietor, which is mentioned here, that it is not a legal entity. It is not a legal entity which is separate from the owner. Means the person will be personally liable, where the person will report its income and expense on Schedule C of the 1040 return. Okay, as I mentioned, since he or she who is going to run the business as a sole proprietor will be personally liable, that's why it will be called as unlimited liability. They will have an unlimited liability. Means even if the personal assets are there which are not brought in the business, they will still be having a right on the liability of the business. Got it, guys? Sole proprietor are easy to establish and they require no specific forms. You don't have to register at a state level, at a federal level. But there will be one exception. We will see that when we do the topic EIN. Okay, employer identification number will be required in case of all the corporations when you incorporate it. Okay, but for sole proprietor, you don't need EIN except for few businesses. Few nature of businesses are there. We'll see that if you are falling under that category, you will mandatorily have to take the EIN instead of SSN. Okay. The business cannot be transferred. It cannot be transferred. You have to close down the business. Let's say a father is having a sole proprietor business and wants to transfer it to his son. So what will happen? Father will on paper mention it as a closed business. Okay, guys. And after that, what will happen? All the assets will be sold in that old business and the son will buy all the assets and start a new business. Got it? That is what it is mentioned over here. Then we have spouse, if filing a joint return, may elect out of partnership treatment. This is something they have just mentioned this one line on the qualified joint venture. Okay, so if a husband and wife are running a business, they will elect to treat themselves as a QJV, and Specifically, they'll use Schedule C and treat themselves as a sole proprietor. Got it, guys? So this is what about the sole proprietor. Next we have is, just a minute. Don't worry, I'll share these notes in the group, or those who are not added in the group, please let me know on the WhatsApp. I'll share you in the personal. Next is corporation. C corporation. What is the nature of that C corporation? It is as considered as a separate entity where it is not a pass-through, right? It is not a pass-through entity, and the liabilities will be limited for the owners, right? In S corporation, we have seen, and in partnership, we have seen it's a pass-through entity. Okay. For those people who are going to enroll living in India, I'll try to share a physical copy of Glam book plus physical copy of our summary book. Okay. So those who have already enrolled might have received the summary book. Those who have not received, don't worry. Within next few days, maybe 7 to 8 days, you will receive it. Plus, you will also receive the Glam physical book, in which there will be some MCQs at the end of each chapter. Okay, so don't worry. I think those are going to receive a PDF. For them, we'll try to give the extra MCQs which are there in the Glam material also. Okay, so see, in corporation, what it is mentioning is corporation were created to allow a limited liability of the owner. Okay, the owner's personal asset will not be responsible. You can differentiate it with the sole proprietor. Sole proprietor are personally liable. Corporation will not be personally liable when you bring something. See, corporation is formed by bringing some assets, bringing some capital into the business. Only up to the value of this capital and asset, it will be liable for any liabilities of the business. Okay. Now, regular corporation will be referred to as a C corp, and they will have a double taxation. If you guys remember, we have done this. Why double taxation? Once the corporation will pay the tax on the income which they earn, and secondly, the income is again taxed when they distribute the income in the form of dividend. So this will be taxed at individual level, right? And this will be taxed at the corporate level. Okay, so corporation will be filing a return separate from its owner, and it will be due on 15th of April. 15th April, right? Corporation is closely held if both the things apply. You need to understand the meaning of this closely held. This word will be used frequently later on when we do the C corp topic. What will happen over here? That if you are not providing any personal services, not providing personal services means what? Where the expertise of a person is necessary, then it is a personal services. Let's say I am into the teaching field. Can I delegate my work to someone else? The people who have joined the course based on my teaching will not accept the other person's expertise, right? So that is known as I am providing the personal service. And if I've incorporated myself by filing a incorporation form, then it's a personal service corporation. Okay, this happens in let's say if there is a bookkeeping or accounting services or taxation services. Let's say expertise is there in tax field. If you are delegating your work to that CPA, and if himself is not performing but is delegating his work to someone else, final review is obviously been done by him, then also it is a personal service corporation. So the main person will be important in providing the services. Okay, second thing is what? The second condition, both conditions should be fulfilled, guys. So what is the second condition? At any time during the last half of the tax year, it is talking about last half, means can I say last 6 months, at any time, if you are owning more than 50% of outstanding stock, it can be directly or indirectly by 5 or fewer individuals. Okay, means let's say me and my other 5 colleagues, we joined together and started a corporation. We all 5 are into teaching field, for example. We are individually responsible for our roles. So it's a personal service corporation, plus 5 or lesser people are holding more than 50% stake in the company, right? Let's say we 5 have invested already into this business 20%. Okay, so that is how it will be 100% shareholding. But here it is just asking about 50%. If you're holding more than 50% and 5 or lesser people are joining into the business, and last 6 months you have to check. Okay, this 2 condition, if it is fulfilled, it is known as closely held company, closely held corporation. Okay, there can be one MCQ theoretical. See, wherever I have taken reviews from all the people who have appeared in the exams, all our students and all my colleagues and everyone, those who go and appear for exam, I used to take the review, what questions were there. Everyone have a different answer. So whenever I declare this in the class that there will be 1 mark MCQ or there is an important question, so please make sure to mark it as a category in the class only. Once you receive the physical book, make sure to mark it as a category. Okay, what will happen right now, you'll not realize, but later on when you start studying the whole course again before your exams, it will be easier for you to refer the A category with the very closest view. You should not skip any A category topic. Okay, so this is what about C corporation. S corporation, what it is mentioning is it's a special type of corporation, first became available to business form in 1958. No need to remember any years, no need to remember any limits and anything. I'll make sure that I'll inform you guys wherever it is necessary. Right now it's just an information that first time S corporation was developed in 1958 for the first time. S corporation is not taxed at its entity level, but will be transferred to the shareholder when the income is earned. Okay, same way S corporation will have a limited liability feature. Always remember the unlimited liability come in partnership only if it's a general partnership. We'll see the different types of partnership. One is general and second is limited. Okay, so S corporation has a limited liability feature just as a C corporation. Okay, and it comprise over 1/2 of the corporation, means almost all the features are same as that of C corp, except something, that is it's a small in size and number of owners, means just mention here as less than 100 members can be admitted. As soon as the number of members increases, you will have to file either as a partnership or as a C corp. Okay, over half of the S corp have only one owner. What does this means? This is talking about practical life. In practical life, whenever there is a business, it's a sole proprietor, always all the CPA and EA who are in practice, they suggest their client that it's better to call yourself as a separate entity by filing a S corporation. In Schedule C, you have a unlimited liability. S corporation, you have a limited liability. Whatever amount you are bringing into business, only up to that much amount you will be liable. Okay, and there are many other benefits for S corporation. If you're a single owner, you can call yourself as a S corporation. So over half of the S corporation have only one owner, because the sole proprietors, the Schedule C, usually get transferred to S corporation. Okay, this is what it is. For the most part, S corp are required to be a calendar tax year. They have to use calendar tax year only, Jan to December. In partnership, we will see that if some partners are having different calendar year, then the partnership firm's calendar year will change according to the partner's calendar year. There is a whole different calculation. We'll see in the same chapter in the periods. Okay, right now we are learning about entities, then we will learn about the accounting methods: cash method, accrual, hybrid, if you want to change the accounting method, or if you want to change any method, it can be your depreciation method or any XYZ condition. If you want to change, what is the process for that? And then periods we will see in case of sole proprietor, in case of corporation, C Corp, S Corp, what can be the accounting period. Okay, so this is what in case of S corporation, you can just remember they have to always use calendar tax year. The tax deadline for the S corporation is 15th of March. Okay, you can remember it. Next is partnership. Partnership is a pass-through entity, as we have seen, which is equal to our, all the criteria will be equal to our S corporation only, and they will not be paying tax, but it will be paid by the partners on their personal tax return. The main disadvantage of partnership form of organization is that owners can be held liable for their personal debt if it's a general partner. And if you're a general partner, right, and you're having a general partnership, then all partners will be what? General partners. All will be personally liable. Got it, guys? Now, what is the deadline for partnership return? It is 15th of March, same as that of S corporation. Limited partnership was the first time which was created in 1970. Even after the formation of S corporation, the concept of limited partnership came in 1970 to allow the limited liability feature. Okay, this is a good thing. Actually, they have limited liability. There will be one disadvantage: those who are limited partner will not participate in operations of the firm. Can I say they will be an inactive partner? Okay, see, here it will be mentioned, the limited partner is not allowed to participate in the operations of the business. Those who are general partner will be the active partners. Limited partners cannot be an active partner. That is what you can just remember. There will be no question based on this thing, but for practical life, you can remember while advising to your client, talking to your clients, you can just refer this thing in your conversation. Okay. Next is limited liability partnership quickly followed the limited liability company in adoption by all states and is very similar to limited liability company. This is nothing but it's just mentioning after 1970, most of the partnership firm use this feature, that is limited liability companies feature. What happens now? Usually whole family, there is a family partnership concept also. Let's say husband, wife, son, daughter, everyone is into a partnership firm. Only the husband is a general partner, he is working as an active partner, and the son is a general partner. The wife and the daughter are inactive partners, so they will be called as a limited partners. They are not going to actually participate into the business. Okay, got it, guys? I hope this much is clear. Next is LLC. In LLC, just a minute. Okay, so in LLC, what will happen? First of all, you will record your firm at a state level. After that, what will happen? I'll just not read this whole lines, but I'll just come to this one. That is entity classification. These things we have already done. You can just read it. But main important thing is this. First of all, you will be recognized either as a partnership. By default, election is what? Partnership or a single member LLC, right? One or less, one people is there, then it's single member. Two or more is there, then partnership. Then you can use form 8832, right? As I mentioned, 8832 is the entity classification election. And how it will be classified at a federal tax purpose. It can be either a corporation or a partnership or an entity inseparable from the owners. Okay, so you have to decide it by filing 8832. Now, once you file 8832, now you want to change the election. or you want to change the classification from S Corp to C Corp or C Corp to S Corp, you can again file 2553 or 883. See, 2553 will be used to call yourself as a S corporation or a partnership. So for pass-through entities, the form used will be 2553. For a C corporation, the form used will be 8832. Now, let's say in future, after 1 year has completed, now you want to shift from C Corp to S Corp. Then you need to file a new form, that is 2553. Okay. Unless the election is made on this form 8832, the domestic eligible entity will be called as a partnership, as I mentioned, or a disregarded entity. Okay, for single owner and 2 or more members. Unless the election is made for 8832, a foreign eligible entity, if it's a foreign entity, let's say someone is sitting in India, has incorporated a business in US, they need to file an article of organization at first, select a particular state, pay the state filing fees. I'll just tell you practically in previous month, we have like, I have incorporated three different entities. Okay. So those who are already having some existence in US, they incorporated the business over there. But the members, the shareholders are not a US citizen. So can I say it's a foreign entity? So if you incorporate a foreign entity, what the IRS will do? IRS will consider it as a partnership if 2 or more members are there, and at least one member does not have a limited liability. Means they will call it as a limited liability partnership. Means one will be general partner, other will be limited partner. At least one should have a general liability, unlimited liability. So that is what it is in case of foreign incorporation. And association taxable as a corporation if all members have a limited liability, if they incorporate themselves as limited liability. Means C Corp. Can I say C Corp having a limited liability for all members? So it will be called as a C Corp. Here they call it as a 1065. I'll use the form numbers. Here they call as 1120. Okay. And in the third option, if single owner is there, you will be called as a separate disregarded entity. Here, the person will be filing a 1040 with Schedule C. But there will be a question in the mind, if a person is not a US citizen, how he can file a 1040? For that, we have a 1040 NR. Non-resident person will be filing a 1040 NR to report any income from the US source, right? He is earning by the business in the US, and if he has just incorporated at state level. Okay, it is possible. See, some client will ask you to incorporate the business only at a state level. Some will ask you to incorporate at a federal level also. If they are having a existence in different states, they have a higher income, high number of partners are there, they will ask you to incorporate at federal level also. But if it's just a small business, let's say you have incorporated the business in Texas, right? So in Texas, it will be called as a disregarded entity, and you will have to file it by 1040 NR. Okay. Now the corporation organized under state law can only be taxed as a corporation. However, entity may be eligible to be classified as S Corp by filing a form 2553. This is for general business, huh, guys? If it's a foreign entity, you cannot elect for S corporation. As I mentioned, in S corporation, no member should be a foreign entity or a foreign individual. Got it? So this is what entity classification. Now you can just go through this LLC thing. It is mentioning over here. We'll take it. I'll just give you this PDF in the group. Up to this much, I'll keep it today. Tomorrow we'll continue with the other topics, that is how to take a EIN. Okay, why it is necessary, what type of business will require a EIN. Then we will see there are some principal business codes, activity codes. Depending on your nature of business, you have to mention the activity code on your tax return. Then we'll see what is the characteristics of the business entities. Whatever we have done till now, all types of entity will have some characteristics. Okay, but this we have already completed some of the features, like formation we have done, liabilities we have considered, transferability, taxation. So I'll just share you whole study unit 1 PDF. Okay, just go through it, whatever we have done. Then day after tomorrow, so tomorrow will be wholly be taken for EIN and the principal business code. Along with this, we will go through the summary of whatever we have done, and some MCQs will be there at the end of this PDF that we will solve along with it tomorrow. So make sure to read and revise on daily basis what we are doing. So the study unit 1 will take 3 days. Okay, in 3 days we'll complete all these 3 topics. Got it, guys? So that's it for the day. I hope everyone was clear with the today's concept and topic. If you feel my speed was very low, then please let me know, because to make you understand the whole theory, whole concept, I have to keep the lower pace only, because some people I can see will be from a very at a very fresher level into this industry, right? So those who are already working in this industry, please cope up with my speed. It will be very low only. In some small topics, I'll increase my speed, not an issue. Make sure one thing to revise on each day. In each batch, on the first day, I mentioned this, hold this PDF, the class notes, day wise class notes, which we have done this all. I will be sharing it on daily basis to you guys in the group. Also, it will be uploaded on our LMS portal. Okay, currently the LMS portal is under development. Within 1 week it will be developed. There you can see all the videos, but till then you will get the videos on the Google Classroom, videos plus MCQs on the same day. Okay, thank you guys. We'll meet tomorrow again at the same time, that is 8:30 a.m. in the morning. Have a good day. Bye. Gopal, the new batch has already started. So okay, guys, so we will end the session over here. Those who want to enroll, they can just message me on WhatsApp, ping me on WhatsApp. Anyways, if you still want time to take the demo sessions for next 2 days, you can wait for next 2 days and then join our regular batch. Okay, guys, so thank you so much. Have a good day.